And there you have it, the closing bell at the New York Stock Exchange, signaling the end of the trading day. The Dow Jones was up and down throughout the day, but ended the day pretty flat, down around 40 points or so. It was a similar story for the S&P 500 and the NASDAQ, which both ended the day relatively flat. Sarah Henry, Managing Director and Portfolio Manager at Logan Capital Management, joins me now to discuss. Hi, Sarah. Great to see you. So what was driving the market today?
So today was definitely a day that in the end reflected measured optimism. We saw outperformance from energy sector wise, which isn't surprising, but we did get some bullish data out of the financials as we're starting this very big week for earnings and a lot of data. Some strong performance from consumer discretionary. We saw some good numbers in the retail sales data last week. But I do get the sense that investors are taking a deep breath here because this is a big week for data, and we're going to learn a lot this week.
A lot to ingest, right? So, Sarah, as you know, a month ago, the major indexes jumped back up from their lowest levels in the past year. Since then, the Dow Jones and S&P 500 have stayed, relatively steady. Do you think that means the market has moved past that fear and volatility over COVID, the war in Ukraine, and inflation that caused all that movement at the start of the year?
Well, I don't think we've moved past it, but we are certainly learning the contours of what all of these individual things mean for our companies that we're following. And it seems to be relatively contained. That is what we're seeing out of today. Some of the banks, the consumer numbers, all sort of indicating that we are in, seeing some impact to these things, but it's certainly not mortal wounds to these companies.
Right. So I want to ask you about inflation, because last week the March inflation report showed the annual inflation rate rose 8.5% in the past year. Again, that's the highest it's been since 1991. How is this impacting consumers? We know that they're continuing to spend, but what are they spending their money on?
So we got a good glimpse of how consumers are adapting in this most recent March sales report that came in somewhat better than expected, with spending growing in 10 out of 13 categories. Obviously, the largest of these was gas stations, but we also saw good numbers in the general merchandise category, electronics and sporting goods, and strength in food services. So this reopening theme and going back to work theme seems to be overwhelming this retrenching idea from inflation. We're not seeing that yet.
Really, really interesting. All right. Well, Sarah Henry from Logan Capital Management, we thank you for joining us and we appreciate your insight.
My pleasure.